If you have ever financed solar before, it is more than likely that you have been scammed. The system of finance is set up for maximum profit, which means that you lose money while the solar financing companies pocket the cash. And finally, in 2024, a huge solar financing scam has been exposed. So in today's video, I'm going to be breaking down the massive solar lawsuit that has come out regarding common solar financing scams, as well as educating you on how to evaluate solar financing options when shopping for solar. And make sure that you stick around to the end because I will be going over the exact APR that you should expect to pay for financing if you're looking to financing solar in 2024 in order so that you get the best deal. Let's get into the video. So a massive lawsuit is taking place as the Attorney General of Minnesota is suing 4 of the largest solar financing companies for inflating the cost of residential solar projects during financing with undisclosed fees. Specifically, these financing companies are accused of selling over $200 million worth of residential solar projects from 2017 through 2023 and inflating them by approximately $35 million by concealing fees within these financing agreements. These numbers, by the way, only reflect Minnesota projects, which only accounts for roughly 1% of the total residential solar market in the USA. Therefore, we can estimate billions of dollars of loans across the USA have been inflated by these concealed fees. The lawsuit specifically mentions how consumers were unaware of the upfront fees, as for there was not proper disclosure on the financing agreements outlining the financing fees. Now, the undisclosed fees that we're referring to is what is called a dealer fee. A dealer fee, simply put, is the fee in which a homeowner would pay to buy down the interest rate on their loan. And the reason why the dealer fee exists in the first place is that it allows solar companies to offer a low interest rate and low monthly payment loan option to customers in order to sell more deals. Now, in the lawsuit, the data shows that the average dealer fee that homeowners who finance solar paid was between 17 and 21%. Just depending upon the lender. It is also important to note that dealer fees are actually calculated from the top and not the bottom, which many people still do not understand. And so when I say that dealer fees are calculated from the top side and not the bottom side, what does that actually mean? Well, let me paint a picture for you. If I'm going to sell you something for $100, but then I tell you that there is a 25% fee added on the top of that, most of you might think that that product will now cost $125, right? Well, not exactly. So the same example in solar is that I'm selling you a solar system for $100 that has a 25% fee on top. Well, that fee is actually $33.45, not $25. There is the big misconception. But how, might you ask? Well, let's take a step back. So $133.45 minus 25% is actually $100. So the real dealer fee for a 25% dealer fee is actually 33.45%. This is super important because it shows how much is being earned by these solar financing companies. In fact, the data shows that the average amount of money being charged to homeowners who signed up using these financing and paid these undisclosed fees in Minnesota over the past couple years was over $6,000. So why do these fees even exist in the first place? Well, to go back to what I was saying earlier, solar is very much of a sales first industry. Look, you have an average monthly power bill of $250, but if you invest into 25 panels on the roof of the house to produce all of the power that you now own, you could simply replace your $250 power bill with a $180 a month solar payment. This provides the homeowners with immediate savings of $70 a month, as well as lifetime savings of tens of thousands of dollars, since their solar payment will not inflate like their energy bill. However, solar companies have to compete with each other, and they do that by trying to present the lowest interest rate option to homeowners with the highest immediate monthly savings. And how they're able to do this is by using a loan which has been bought down to a lower rate, which will reflect a lower monthly payment. So let me present you with a scenario. You have a homeowner who lives in California and she pays on average $300 a month to the electric company. She's shopping different solar options to reduce her monthly bill and own her power. And so what she does is she calls a couple companies, and the first company comes out to her house and says, we can offset your power needs with 25 solar panels. And this is going to cost $30,000. But if we finance it at 9% over 25 years, you'll have a fixed monthly payment of $250, with you being able to pocket the 30% tax credit and not having to put it back towards the system. Now, this seems like a pretty good deal because the homeowner is saving $50 a month from the get-go, but the homeowner decides to have another solar company come out and give her a comparison bid. Now, this solar company understands that the homeowner is looking for immediate monthly savings. And so they quote her the same 25 panel system, this time, however, with a 4.99% loan. This loan, however, has a dealer fee of 20%. And so what they have to do is add it to the top and now present her with an option of financing $37,500. Now, instead of emphasizing the total cost, they emphasize that the monthly payment will now be $219 instead of their competitors' $250, making their deal seem way more appealing. Now, in one regard, if the homeowner never decides to pay off her system early, it is true she will pay less over a 25-year period with the lower interest rate loan that has the dealer fee. But what happens if she does what most people end up doing, which is paying her loan early and under the first 10 years? Well, unfortunately, if she moves forward with the second loan option, the lower monthly payment loan, she will also have to pay off $7,500 in dealer fees, which was unavoidable. And so this is the big issue with dealer fees. Solar financing companies understood that the majority of homeowners paid their system off earlier by either contributing the tax credit or doing other things. And solar companies were selling more deals when they presented homeowners with lower monthly payment options. I mean, just look at how some of these companies are using these low interest rate loans.
When you look at the grand scheme of it, even if there's call it a 25% to a 35% fee, if you can make it to where their payment is less than their current cost of power,
sure,
it's a no-brainer for the customer because they're already going to pay that money anyway.
And so if you're in this scenario where you're looking to finance solar, but you don't know which of the two options is going to be a better deal, it's important to compare at what point over time the crossover in which the loan option with the higher interest rate but no dealer fee ends up costing you more money to interest payments than the lower interest rate option. To make this simplest for you to understand, it is approximately year 9 in which the crossover will occur, where if you have not paid the system off early, the lower interest rate option has saved you money with not having to pay higher monthly payments towards interest. Otherwise, if you've paid the system off earlier than 9 years, you would have saved more money if you had the higher interest rate loan without the dealer fees baked into the principal. Again, though, these figures are going to vary by the loan amount and the specific terms that you're offered, so it will not be the same timeline for everybody. On that note, I'd really like to know if you've ever shopped for solar and seen a massive difference in pricing between the quotes and monthly payments, or if you've ever signed up and realized that you're paying a large dealer fee on your loan. Post it in the comments down below. I'm really curious to know. Now, going back to the lawsuit alleges a couple other things as well. Firstly, dealer fees are not thoroughly outlined in the financing agreements. Secondly, they argue that companies and sales representatives were falsely telling customers that the inflated price only reflected the system's costs rather than the financing fees. Now, people for a while have compared the streamlined solar loan process to the no-doc mortgages of the 2000 subprime housing crisis, when you could have the financing docs signed and approved in under 5 minutes. And I can see how that happens. It's not uncommon to have sales reps in the house with the homeowner in the process of selling solar and simply hand them over a tablet during the paperwork process, where they can use a software like DocuSign and have a 20-page document signed in under a couple minutes by just the homeowner tapping through the signatures as they scroll. Crazy. And so where's this going to go in the future? Well, dealer fees are likely not going to go away. It has been common amongst mortgages and car loans to be able to buy down the interest rate for higher savings if you want to finance for the long term. So that option is likely just not going to go away. As interest rates remain high in today's environments, analysts are predicting that in fact leased solar systems will continue to be sold as they avoid both the dealer fees and high interest rates. So to give you some idea on what you should expect to pay for a no dealer fee, same as cash price, you're looking at paying about 9.99 to 10.99% just based upon what you're able to get approved for. Now, fortunately, the solar industry does not do what the car industry does in marking up the offered interest rate by the bank, so you do not have to worry about overpaying on your interest rate from a solar company or a solar financing company trying to make extra money. I would also make the prediction that more and more homeowners simply move forward with purchasing the systems cash or pursuing other financing options such as HELOC loans, loans from local banks or credit unions, among other options, as they can sometimes present lower interest rates. But let me know what you guys think down in the comments. If you are getting quoted for some of these options, including leases, make sure that you check out my video going over the differences between financing and leasing solar in 2024, as it can save you a lot of time and money if you know. But again, thank you guys so much for watching, and I'll see y'all next time.